Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Indian rupee at all-time low. Global crypto market down. Global stock market down. One of the main sentiments and feelings that needs to be controlled is the fear of loss. The human mind partly processes the pain of loss of money in the same way in which it processes the fear of death. But today, we will discuss the possible reasons for this global crash. As history may or may not repeat itself, but man does, and humans are based on sentiments. So markets up and downs are just a mass byproduct of human thoughts, and that too in a gross form. We all run on emotions. We make decisions based on emotional intelligence, and then we justify the act by logic. This is the same emotion which turned the good old days in the American economy into the black days back in 1929, when they saw a sharp decline in US stock market values that contributed to the Great Depression of the 1930s. The Great Depression lasted approximately 10 years and affected both industrialized and non-industrialized countries in many parts of the world. What do you think? Where does the emotion comes into play in all this? Answer is, when everybody sees a huge leverage that they can make by investing or purchasing something, which can make them stand out from the rest of the community, people ought to perform things out of emotion. Billions of dollars were drawn from the banks into Wall Street for brokers' loans to carry margin accounts. People sold their Liberty bonds and mortgaged their homes to pour their cash into the stock market. In the midsummer of 1929, some 300 million shares of stock were being carried on margin, pushing the Dow Jones Industrial Average to a peak of 381 points in September. Then from September to October, prices began to free fall, and within the span of 2 months, Dow Jones fell from 381 points to 300 points. A perfect example of how an overwhelmed emotion without analysis puts everyone in a country on the verge of impoverishment. Now let me take you 93 years ahead. No. No need for mathematics. It's simply 2022. The 1929 crash was really scary, but why is the market falling now? The global markets showed some signs of falling in early April of 2020, but gained a good momentum after that as people were in search of a good alternative to their daily jobs to earn a good amount of money. And apart from the stock market, people redirected their funds to the less explored cryptocurrency market to get some great returns out of it. And 2020 became the year when Bitcoin surged to an all-time high of around $26,000, and people all over the world poured their money more into these digital assets. But the uninterrupted reigns of cryptocurrencies started to face roadblocks from the global government. And on the other side, mainly pharma shares were on a full throttle in the stock market, as that was the need of the hour as well. But due to the global vaccination campaigns in the years later, the market got its momentum back, with the price of stocks taking a good correction, and slowly the market got on the tracks. With every country seemingly having its own approach to tackling the pandemic, supply chain issues and workflow disruptions could remain commonplace throughout the year. The immediate trigger for the stock as well as the crypto market astounding crash is undoubtedly the massive sell-offs by investors amid heightened inflation fears. Down the spiral, we all know that there are many more reasons out there which contribute to the global market crash, and one of the major reasons is the Russia-Ukraine war, which has raised a widespread alarm for the upcoming inflation, due to which we recently saw Federal Reserve taking the interest rates at a high. The Indian market had anticipated and factored in the high rate hike, so there were no shocks. With the US offering higher rates, foreign portfolio investors (FPIs) will be attracted to exit nations such as India and invest in the relative safety of the dollar. So far in 2022, FPIs have made a huge outflow from the Indian crypto industry as well. Rising oil costs as well as Fed rate hikes and FPI flight have weighed on the Indian currency. Meanwhile, the potential of a US recession could be bad news for global crypto market. Asian countries, notably India and a few other rising economies, on the other hand, may be spared a full-fledged recession because their fiscal positions are better, and demand in these areas has not yet recovered to pre-pandemic levels. Following these events worldwide, the crypto market witnessed a huge downfall. Investors are avoiding digital assets as whole, causing a temporary plunge in crypto market. Although the feelings are surely fleeting because the market has ups and downs, even some of the most fearless investors are utilizing the present downturn to invest in order to increase their profits. And the final words are here. All in all, it's a blend of all the mishappenings all over the world, which has certainly contributed to the massive sell-offs both in cryptocurrencies and stock markets globally. Wars always slow down the recovery rate of a country, as well as it does impact world peace and economic health also. So, we wish this to get over soon, as there is so much to be done now. Bitcoin's historical trend of closely following its halving stock-to-flow model shows an ambitious and extremely bullish outlook, whereas the predictions are that the value of virtual digital assets will rise, reaching a new all-time high as a result of a powerful network effect that is currently at work for Bitcoin, or more generally for cryptocurrencies. As a result, more users will join the network of the coins and will lead to a greater rebound.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.